I recently did a 3-hour live stream during the Medical Properties Trust earnings conference call and beyond. And some of you may not have time for a 3-hour video, so today I'll summarize for you why the market has approached MPW with cautious optimism recently, as well as go over some of the key points from that conference call. This is the one if you just had a few minutes to spare. Also, just to get it out of the way, I do invest in shares of MPW. Just because I have this stock doesn't mean it's right for you or for anyone else. Now, they reported the final quarter of 2023 just a couple days ago, and it was sort of a mix of good news and bad news. As you can see, though, in the last couple days, the market hasn't really moved too much on this stock. While they did beat on their normalized funds from operations, they did report a lot of non-recurring write-offs and impairments, most of which were related to Steward. They did also form some agreements to offload some assets and raise about 25% of the $2 billion in liquidity they want to achieve in 2024. This includes the sale of its syndicated term loan in Median, the parent of the Priory Group, for $115 million, as well as agreements they've got to divest 5 hospitals to Prime Healthcare at a 7.4% cap rate for $350 million. Now, they still have about $1.5 billion left yet to raise, but they do say that they are making progress and have some stuff in the works on all that, though they couldn't get into specifics on the call. Also, part of the plan with Steward is to have them sell operations in some of their hospitals to other operators, which would put new tenants into the buildings. And CEO at LAKEY stated, "With regard to Steward, we are encouraged by the amount of interest received to date from other hospital operators for these mission-critical facilities, and we expect this real estate portfolio will either resume its contributions to earnings or become additional sources of liquidity as the year progresses." This, of course, helps stop the bleeding at Steward if they're not profitable on these facilities, while at the same time providing either a new tenant, or if one of these operators wants to buy the hospital outright, new liquidity for MPW as well. I think it's a win-win all around if they find new operators for these facilities. Also, Steward and Prospect are being moved to cash basis accounting. As of December 31st, 2023, the company's assets include $5 billion of leased real estate and other investments, which will be subject to cash basis accounting in 2024, with rent and interest only to be recognized as cash is received. So when you subject something to accrual accounting, you count it as revenue when you bill it, essentially. In this case, they will only recognize it when they actually receive the cash. This will, of course, make it a little bit more obvious just by looking at the numbers as to how much rent and interest they're actually collecting from Steward and Prospect. Whereas under accrual accounting, unfortunately, it could get a little bit more convoluted, and they suffered a lot from accusations of non-transparency, I think, because of that issue, and I believe this will help. So while the market is showing what I think is cautious optimism, these two final points are probably the reason why the stock price has not reacted very sharply to the upside. One is that they offered no full year guidance because of, I think, how many irons are in the fire, and they don't know exactly how certain situations will play out with regards to raising liquidity and that kind of thing, and also with regards to Steward's recovery and that process. The other is that they offered no specific details on the dividend for the next quarter or the year overall. When it came to the dividend, they basically just say that the board will meet on that shortly and that their, quote, dividend policy remained unchanged. But they didn't say for sure, yes, we're just going to, pay the same dividend this upcoming quarter. They also didn't say we're going to, cut it or eliminate it. I certainly don't expect that they'll be raising it anytime terribly soon. It's either going to be steady as she goes, or it's going to get cut/eliminated. Those are really the only two choices, so one could say it's 50-50. I personally think that overall it might be wise actually for them to temporarily suspend it, though I do think they would probably try to avoid doing that because it has a sort of a bad perception, and I do think a lot of people are in this for the dividend, even though at the moment the dividend isn't the primary driver of value. It's if they can preserve the balance sheet, which they need cash to do, and the dividend is low-hanging fruit as far as raising cash. So that's just my 2 cents on the matter. If you weren't able to make it to the live stream or don't have time to watch something that's over an hour, or in this case over 3 hours, then I hope you at least managed to catch this video and it got you up to speed. Please remember to subscribe to the channel if you're not already. Hit that like button, notification bell, join my Discord in the description, follow me on Twitter or X, whatever you want to call it, link in the description. Go and subscribe to the Cashflow Kings live show, link in the description. We do a live show every Saturday, 8 p.m. Eastern. It's a heck of a show. Take it easy, everybody.